Securities. Thank you so much and good morning. Thank you so much for joining us. Shahina, I'm going to come to you first because what do you make of, the entire outlook coming in on NBFCs then? What are you making of the whole space as a whole?
Well, I think NBFCs will have to be very stock specific if you're looking to invest, because as the RBI governor also mentioned just a little while ago, that some of the NBFCs which are open to unsecured lending, the norms are likely to be tightened, and the RBI is watching. So I think to an extent it is better to stick to some of the larger NBFCs, something like maybe Sundaram Finance, or maybe even Geo. So I think to that extent, you should limit your choices to some of the larger ones.
Right. So that's the take coming in on NBFCs. And like we mentioned that you had the RBI governor who actually spoke about the NBFCs at length in the speech actually. Let me just highlight some of the points that he actually spoke about. He said that some NBFCs are pursuing growth aggressively, this without the risk management framework. They are chasing excessive returns on their equity and they should avoid imprudent growth at any cost. In fact, let's hear out what RBI governor himself had to say.
Some NBFCs are aggressively pursuing growth without building up sustainable business practices and risk management frameworks, which should be commensurate with the scale and complexity of their portfolio. An imprudent growth at any cost approach would be counterproductive for their own health. Second, driven by significant accretion to their capital from both domestic and overseas sources, and sometimes under pressure from their investors, some NBFCs, including microfinance institutions and housing finance companies, are chasing excessive returns on their equity. There are certain NBFCs where it is happening bilaterally. We are engaged with them, but I think this is a message which it's important not only for these outliers to keep in mind, but I think this should act as a guidance for the entire sector. NBFCs may review their prevailing compensation practices, variable pay, and incentive structures, some of which appear to be purely target-driven in certain NBFCs. A compliance-first culture, a strong risk management framework, a strict adherence to fair practices code, and a sincere approach to customer grievances. The Reserve Bank is closely monitoring these areas and will not hesitate to take appropriate action if necessary.
All right, so that's the RBI governor on talking about the NBFCs, in fact, warning or cautioning the NBFCs. But Hemen, coming to you, don't worry, I'll not ask you about the NBFCs and put you in a spot given the fact that there's yet to react to what the governor had to say. But I want to ask about the Nifty Bank to you and how is it looking on the charts? We've seen a recovery actually creep into the markets, but do you think this sort of a recovery that we've been seeing is here to stay and will be sustainable going ahead? What are the technical levels that one should watch out for?
A very good morning to you, Cheryl. A very good morning to you, Shreyasi. Thank you for having me on the show. As of now, Cheryl, it's a recovery, not a rally. We've virtually fallen off a cliff, whether it's the Nifty or the Bank Nifty. Bank Nifty from a high of 54,467, Cheryl, you are down to 50,200. Now that's huge. 4,000 points is massive. So as of now, we are recovering. There's a gap above 52,600, Cheryl. I think the Nifty could make or probably will make an attempt to try and cover up this gap. If it doesn't cover up, it's a sign of weakness. Currently, there is resistance coming in at around 51,750. So if we sustain above that, then we see a further upside coming in. The bounce is not yet over, but I don't think it's going to be a linear move. There will be some ups and downs. And if one were to worry whether this recovery has run out of steam, a close below 50,875 could be the first alarm bell ringing. So as of now, a recovery is underway. I think further upside seems to be on the cards, but it's going to be a choppy move. Once again, as of now, it's still a recovery, not a rally. Sure.
That's the take coming in on our Nifty Bank, that right now you could just say that there is some sort of a little bounce back coming in on Nifty Bank, but you can't say the rally is at play. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that will be flashing on your screen. Remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity, and the time horizon. In that way, our experts will be able to help you better. Talking about our experts, today we have Hemen Kapadia, who's joining us on the technicals, while on the fundamentals, we have Shahina Mukadam on the show. Once again, good morning to you, Shahina, as well as Hemen. Thank you so much for joining us on ET Now. Let me take the first query coming from Jay. He's writing to us from Mumbai. He has about 10,000 shares of IDFC First Bank at a price of 89 rupees per share. Shahina, he wants to know, should he add some more in current price for the longer term?
Well, I think he should wait. That is not one of my top picks in the banking sector. If he wants to add in banks, I think SBI looks interesting as of now in the PSU space. And private, I would still go with Federal Bank on corrections.
The take coming in as far as SBI and IDFC First Bank are concerned. But Hemen, I'm going to come to you because we do have Amit who's writing to us from Mumbai. He has 37 shares of Adani Ports purchased at a price of 1,470. So what is your take coming in on this one? And he also wants to know if one can enter Ajanta Pharma at the current levels also.
Well, Shahzi, Adani Ports is great from a longer term point of view. We remain unequivocally in a longer term uptrend. We are in an intermediate downtrend or correction, however you label it. Currently, downside appears limited, or recovery is on the cards. We should be giving a bounce back to 1480-85 only. If we close above that and only, then do we see a further upside. We've had a brilliant run up. Excuse me. Stock is a bit tired. Ajanta Pharma, 1 second. So if he wants to hold, it should be from a longer term point of view. Ajanta Pharma is in an uptrend on all time frames, relatively strong. I would suggest to hold. A close about 3470 would mean the continuation of its up move. 1 second, uptrend on all time frames.
Let me give you a break then, Hemen, to catch that breath. So let me take this next query instead to Shahina. And Shahina, coming to you, we have a viewer who's written about ACE. He wants to buy ACE. She wants to buy ACE by selling Ahluwalia construction shares, where she's at a loss of about 20% over the last 2 months. Do you think it's a good move to switch out of Ahluwalia to come into ACE?
Well, I think she can look at ACE as of now. It looks like a decent bet, given the fact that they have got decent order book. Yes, so she can make the switch.
The take coming in as far as ACE is concerned. But moving on, then Shahina, I'm going to come to you for this one because we do have Revant who's writing to us. He's a short-term swing trader writing to us from Stockholm. Narayana Rudalia is what he wants to know about, because he does have 1,000 shares purchased at a buy price of 1,225. And what is your view coming in on this one, as well as JSW Energy that he got also at a buy price of 710?
In the shorter term, it looks like it will consolidate for some time, but he can continue to hold it. He can keep a stop loss of close to 1,200, which is closer to current levels. He can continue to hold for the medium to longer term. They are expanding. In terms of JSW Energy also, I believe it looks good from current levels. They have got a lot of orders in place and they're doing much better than they were doing last year. Valuations are reasonable in the overall sector, so he can continue to hold both.
He's a swing trader. Let me come to you, Hemen, to get your view and what's your thought coming in on both of these counters. Narayana Rudralaya, 1,000 shares at price of 1,225. He wants a target for 3 to 6 months. While for JSW Energy, his buy price is 710, a target for 3 to 6 months. What's your take coming in on both of these counters? I believe for JSW Energy, his buy price is on the higher end.
Cheryl, from a slightly longer term point of view, it's been, we'll start with Narayana Rudralaya. 10 months of sideways movement, no directional bias whatsoever. On the other hand, we can also say that it's had a run up from 200. So if it's consolidating over here, it looks not like a distribution and a consolidation. So hold in terms of targets. He needs to keep a stop loss at around 1175. 6 month target would be around 1360 share. And as far as JSW Energy is concerned, the setup comparatively to Narayan Rudale is different. JSW is in an uptrend and continues to do so. We've had a correction and we are snapping out of that. Firstly, stop loss 660, target of 780 share.
All right, so that's the take coming in on JSW Energy as well as Narayana Hrudayalai. We got a take coming in from both of our experts on this one. But PK wants to know, what's the best buying price or for Godrej Properties? Are you seeing any best buying price right now, Hemen, on the charts for Godrej Properties?
Okay, as far as Godrej Properties is concerned, I think the entire real estate pack is beginning to look up. So coming back to Godrej Property, we've been consolidating over here for there's a fourth month. So a buy would be at around 2,800. It's sideways. There is no directional bias actually. So we are looking to buy near the support level. So the stop loss is more visible and it's a risk reward ratio more favorable. So I would say buy around 2,800, stop loss of 2,700.
So that's about Godrej Properties. But Shahina, I'm going to come to you because we do have Rebecca who's writing to us from Calcutta and she wants to know about HDFC Bank. She has 100 shares purchased at those 1,400 levels. She wants to know if this is a good time to stay invested or if she should book profits and invest in some other stock instead.
A very short-term investor, then you're not really going to make too much money. But if you're a long-term investor, I think in terms of valuation, HDFC Bank is best placed as to what they were historically. And I believe most of the merger pains that they are going through should be over in a couple of quarters, couple of months. So I think it's better to continue to hold it in your long-term portfolio.
All right, so that's the take coming in on HDFC Bank. Coal India, then what's your view on this one, Shahina? This one is coming from Satya. He wants a buy price. So let me take it to Hemen instead. Then Hemen, any buy price that you can see for Coal India for a period of about 1 to 2 years? He's already holding about 1,000 shares at a price of 500. So it's there about his buy price. Do you think add some more? Makes sense?
Yeah, but one, I don't think he should go the whole hog. He should spread his purchase. Why I'm saying that? Because we've had a run up from 210 to 540. Currently, it's consolidating sideways and keeping the quantum of the run up in mind is going to take time. So it's not going to get over in a jiffy. So I believe it should be in 2 or 3 pieces. 480, 450 and 410, 3 levels where he can add Coal India from a longer term point of view.
So that's about Coal India. But China, I'm going to come to you because we do have Tinku Bala who's writing to us from Punjab and he wants to know about RateGain Travel Technology. He has 1,800 shares at a buy price of 600 rupees. What is your take coming in on this one then?
Travel actually has, it's been consolidating for some time after that nice rally that we had. In terms of, business, it seems that, for this quarter also, it's going to be a bit subdued. But over the medium to longer term, if he buys it at a lower, maybe at a dip, closer to, maybe 700, then he could look at a decent return. But as of now, I would think it's a void.
Question, I think we've got a couple of time from our viewers. I'll take this one to both of you because Sangeeta from Pune wants to know between Adani Ports and JSW Energy, which one is a good buy for a period of about 1 to 2 years? Fundamentally, what's your take coming in, Shahina? Which one do you think that she should opt for when it comes to fundamentals?
I believe Adani Ports has rallied a lot. So as of now, even JSW has JSW Energy. But between the two, for the medium term, I would go with JSW Energy, considering that I believe it will give you a better return.
Shahina, I just wanted to, is JSW Infra, I'm sorry if I said energy by mistake, sorry. Adani Ports and JSW Infra, similar field, isn't it?
Well, if you're looking between the two similar stocks, JSW Infra and Adani Ports, I will still go with Adani Ports because they have got the most market share. They have got a lot of expansion plans, number of ports that they are even in the process of acquiring and building. So I would go with Adani Ports.
That's a whole coming in on Adani Ports, but I'm going to come to you, Hemen, because we do have Shrikant who's writing to us from Bangalore. He wants to know about Oil India. 650 was his buy price. What is your take coming in on this one then?
Okay, we've entered a corrective phase. If I look at long-term charts, it still seems copacetic. But yeah, I would request the viewer to keep in mind 120 to 760. You need some time and price correction before venturing in a stock which has had such a brilliant run up. So it's going to take time. So if he's a longer term investor, I think it's a hold. If it's a shorter to medium term view, I think it's a sell on bounce, and the bounce should come to around 630.
All right, Hemen, I'll actually come back to you because I wanted your view as well when it comes to Adani Ports versus JSW Infra. Which one do you think is a good one to buy right now when you talk about the technical front? Because if you talk about fundamentals, we got Shahina's take, she would go with Adani Ports.
I would also go with Adani Port. The logic is I don't have too much of data on JSW Infra share. The longer the data, that much more clarity I could have from a bigger picture. So not too much of data. Adani Port is in a longer term uptrend. And yes, I think China also mentioned that we've had a brilliant run up. So I would look at a target of around 2000, but that's a 2-year plus target. So yes, I would also vouch for Adani Ports compared to JSW Infra.
There you go. That's the take coming in on Adani Ports, and that's what Hemen also had to say. Quite bullish on that counter as well. But let's take a very quick breather on the show. When we come back, we'll continue taking all of your stock-related queries. So don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's continue taking all of your stock-related queries. Then, in the next query that we have is coming in from Ramani from Bangalore, Shahina. She wants to know about Granules India. She has 1,090 shares, purchased at a buy price of 365. What is your take when it comes to Granules India then?
Yeah, I think there are better opportunities in, compared to Granules India in the pharmaceutical space. Something like a Cipla would look better. I would even prefer a Biocon. Granules India is doing well in terms of their API, but I believe in terms of product portfolio for the longer term, I would, pick up a Cipla.
Right, so Cipla looks better actually when it comes to a long-term perspective investment when you talk about the pharma sector space. But this one is coming in from Subramanian from Chennai. And a very simple question actually, Hemen. He wants to know what to do now, whether to book profits partially on this relief rally, or is there some other stocks that he can look to buy to go ahead and infuse the money. What's your take coming in on this? I'm sure that everyone was waiting for the markets to settle down a bit before deploying some cash, because nobody could predict where would the bottom be, given the fact that you had China on break and everyone was waiting for China to actually come back from break. And after it's been back from break, it's only one way for the Chinese markets, and that's down.
Absolutely, Cheryl. Frankly speaking, is a mission impossible. Trying to, sort of identify perfect tops and bottoms. It's extremely very, very difficult. Yeah. Having said that, we've taken support at 24,753. That was important. If I were to look at retracements with some hits and misses, like I said, the bounce should go to somewhere between 25,550, upside to 25,639 would be my upside level. 25,550 to 25,639. This would be a pullback level. Like I said, one, the retracement, the second is a gap, which I think the Nifty will make an attempt to cover up. So till then, things are fine. As of now, the recovery is very much in play. It's not run out of steam yet as we speak. Closer to these levels, we'll see the actual strength of the market. The VIX has cooled off a bit and needs to cool off a little bit more, but it's okay. So once 25,550 comes, one needs to be a bit alert because we will be running into heavy weather. And after that, this 25,640 level is where we'd actually see how the Nifty manages or actually tackles that resistance level. So as of now, I think it would be better to be slightly sector or specific. IT, at least HCL Tech and Infosys have shown a lot of resilience and strength. Even metals, I feel, are looking relatively better despite what is happening or happened in China. So I'd say keep an eye on these two things. Otherwise, it's too raw. The gash has been deep. The recovery is underway, but is this, up till now in the last God knows how long, we've seen a sharp decline and a corresponding new high. This time, I think it could play a bit differently. So I'd say baby steps. Let's take it one step at a time. But these are the levels to keep an eye.
There you go. That's the take coming in when it comes to the markets. Now, after giving you that catch-22 situation, Hemen, I'm going to give you a quick breather. I'm going to take the next query then to Shahina. Shahina, we have Venu who's writing to us from Chennai, a regular viewer of this show, who's writing to us about Escorts, Kubota as well as BEL. What is your take coming in for these two counters? He wants to know if the correction is over in both of these counters.
I would say that the tractor sales have started picking up. We've had good monsoons, and escorts also, I believe, will do better. We've seen the numbers actually should start doing better in the current year. So escorts definitely looks like a ad at the current levels. And BEL, yeah, they have got huge order book position, doing pretty well. And I think the correction, offers you an opportunity to get into the stock. PSUs, while they have gone into a consolidation phase, I think in the overall space, BL does look interesting compared to the others.
All right, let me take this next query then, and this next query that I have is coming in from our viewer, that is Imran. Uh, uh, Actually, before I take Imran, let me take this one from Venu, who's a senior citizen, wants to know, okay, Venu, I think we've just answered. Chandrakala wants to know about Precall as well as Varun Beverages. For the long term, which one do you think would be an apt one right now, Shahina?
Yeah, Varun Beverages is extremely expensive at current levels, but the business is, a very good business. Long term, they're expanding into Middle East also, but I would prefer buying it at dips. It's an expensive stock. You can keep a track of it. Look at lower levels to enter, and Precall. I would say Precall I would avoid at current levels.
That's an avoid coming in on Precall. I'm going to go to Hemen for the next one because Imran is writing to us from Kolkata. He wants to know about Adani Total Gas, Hemen. He wants to know if he should buy at this point of time. So what is your take coming in there?
It's been it's been a year of a sideways movement, and currently there aren't any compelling technical reasons to warrant a buy. If you're taking a short-term punt, a very short-term punt for a week or so, then probably a bounce is coming in. But frankly speaking, Shreyaji, 1 year of doing nothing, yes, there is a mild negative overhang which cannot be ruled out. So after 1 year, we either need to break out or break down. No, currently neither is happening, but yeah, there's a slow erosion. So I don't see any reason why he would buy at this point in time. Shreyaji.
Then on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, more of your queries will be taken. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of the stock related queries. And the this next query that I have is coming in from our viewer Naveen, who's writing to us from Pune and wants to know whether it's the right time to go ahead and buy CDSL. What's your take, Shahina, coming in on CDSL, given the fact that now you have NSDL also that's got an approval from SEBI to go ahead with that IPO? What would that actually mean for CDSL? And also, right time to buy, a good bet to buy?
Yeah, it is a good bet to buy, but I would prefer if you could, buy it at dips. Somewhere close to maybe 1,300, 1,310 would be better levels to buy it, in my view. But if you hold it for the longer term, it's a great business to be in.
All right, so we also have Sunil Kumar who's writing to us and he wants to know about Ujjivan Small Finance Bank. Hemen. He has 1,160 shares each in Ujjivan Small Finance Bank as well. He wants to know what your take is then.
We've entered a correction of a greater degree, Shreyasi, and we're close to very important support levels, longer term support levels. So currently at 39 and 40, these levels are crucial. I believe they would hold for the time being. If they do, the first sign or technical green shoot should come in above 45 closing on the weekly chart. So as of now, hold. A recovery is underway. It doesn't look spectacular, but the downfall seems to be arrested. Above 45, things should start looking better.
All right. Let's move on then, and let me take this next query that is coming in from Tanuja from Calicut. Wants to know about Zomato holding a good quantity at a price of 170. Wants to know whether should go ahead and book profits, and if yes, then at what price. But Shahina, let me come to you. Do you think it makes sense to book profits in Zomato, which has actually seen a spectacular rise in the last 1 year? And fundamentally, actually, no doubt there is a lot more competition coming in the quick commerce space. But this one is a hold for long term, you believe?
In the longer term, if you continue to hold, of course, with new competition coming in like Swiggy, and there would be some profit booking in Zomato and shifting to Swiggy, which is equally good, an opportunity to remain invested in the long term. So definitely the IPO will attract a lot of interest and attention. But Zomato by itself, if you're holding, I would say that, it has moved into profitability. Blinkit is doing pretty well. Expanding into a number of stores, dark stores across India. So I would continue to hold. But if you would like, you can book part profits and then invest in the Swiggy IPO.
So that's the take coming in as far as Zomato is concerned. Hemen, I'm going to come to you with the next query because we do have C. Rajat Kumar writing to us from Ernakulam, and he's writing to us about Reliance Industries. Now, he did buy it at an elevated price of 3,000, but what is your take when it comes to this one then?
We've gone nowhere over the last 8 to 10 months, Shreyasi. It looked good. Suddenly, it turned the other way. 2720 is rock solid support. I believe that should hold. So from a longer term point of view, things haven't got technically bad. It's the the medium term and the shorter term charts which are looking wobbly. So I think if it's a longer term view, it's a very clear hold, nothing to worry.
All right, that's the take coming in on Reliance Industries. But I just want to know, out of curiosity, would there be any reason that would deter you to go ahead and buy this counter or hold this counter for the long term, Hemen? Because by default, when you say HDFC Bank, you talk about TCS, you talk about Reliance Industry, they are long term bets, they are bets that you are supposed to stay put or have in your portfolio for the longer term. But when you look at the returns, they're not that exciting, or maybe if someone who's been holding on for long would be tired because of the consolidation that these counters take after rallying. What's your take on that?
You hit the nail on the head, Cheryl. I think the whole bunch of stocks that you mentioned haven't delivered returns. And if I can take 30 seconds more of your time, there are a whole bunch of stocks which haven't done anything. Kotak Bank, HDFC Bank, Bajaj Finserv, Bajaj Finance, Asian Paints, SRF. All of these 3.5 to 4 years done nothing. Raging bull market. I think Bajaj Finserv was the only one which made a new high. Otherwise, none of these stocks have made a new high, and they virtually delivered no returns. But logic says we've had a phenomenal run up in the mid caps and small caps. FIs are currently on a sell mode. When things start looking better, money will flow in the mainline stocks. And if you have a quality blue chip, which has, frankly speaking, not done much for almost 4 years, Cheryl, when things start picking up again, I think these guys will be right at the helm of the lead. So I think that's why I would say something like this is a must buy. And HDFC Bank breaks out after 4 years. It's going to be a year or two of good technical. I mean, fundamentally, yes, but couple of almost 2 years of good technical. So I'd say this is a waiting game. I mean, we've been waiting for a long time, but I think it should be off.
China, do you want to come in on this one by any chance?
Reliance, of course, what happens on a broader level with large caps. Of course, they underperform, especially if you give some of the, the very, very large companies, like, for example, Reliance, HDFC Bank. You take some of the very large ones, HUL. These are, like, I would classify them as safety stocks. You hold some of them in your portfolio because they're extremely liquid. And especially in times like this, which pretty volatile, the overall market valuations are expensive, money is shifting to some of the other emerging markets. So to that extent, one needs to have some of these stocks in the portfolio because the businesses in which they are very good businesses if you hold for the long term. So given those facts, I would hold some of these in my portfolio.
All right, so with that, let's also take a quick breather on the show. When we come back, we'll continue taking all of your stock-related queries, viewers, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking your stock-related queries then. And we have Sally Devi, who's writing to us from Kerala. Shahina, she wants to know about MTAR Tech. She wants to know if this is a good bet at this point.
I'll pass this question.
All right, Hemen, do you want to take a look at MTAR Tech then?
Yeah, Shahina. MTAR Tech, downside limited, short-term bottom in place, resistance at 1780. Worst seems to be over, but if things need to improve, we need a weekly closing above 1800. Not very compelling, but yeah, I believe it's deeply oversold and a recovery is underway, which could improve further from here.
All right, so that is the take coming on MTAR Tech, and that was the last query for the day. Thank you so much, Shahina, as well as Hemen, for joining us on the show and resolving all of our viewer queries, as well as giving your take on the NBFC space and the markets as a whole. But let's move on then, viewers, and in what may turn out to be a historic antitrust breakup, the US Justice Department has told the federal judge it's considering a breakup of the tech giant, that is Google, as an antitrust remedy. The recommendation comes after the US judge in August ruled that Google holds a monopoly in the search market. My colleague Sumita is here to tell us what exactly the implications could be. What was Google's take coming in on this point? Sumita, over to you.
Google face a historic antitrust breakup, while the Department of Justice in the United States has indicated that as a possible remedy for ending Google's alleged monopoly in the digital ad space. In fact, a number of recommendations have been made as well on the likely action that could be taken from the regulator. Number one could be related to behavioral, introducing behavioral and structural remedies that would prevent the big tech company from using products like Chrome, Play and Android to advantage Google search and related products. Number two, there could be some sort of limits that could be imposed, or the antitrust regulator could prohibit default agreements that Google makes and other revenue sharing arrangements that are related to its search and other products. It could also look at making data available to competitors, Google's data available to competitors, including AI related features, and the regulator could also look at lowering barriers to would-be rivals or other competitors in the space for licensing its ad feed separately from search results. Let me also quote from what the Department of Justice has said. It basically says that for more than a decade, Google has controlled most of the popular distribution channels, and that has left rivals with little or no incentive to compete for users. So that big statement really coming in from the Department of Justice reportedly. And so what is Google expected to do next? Well, it is in all possibility is reportedly planning to appeal against the ruling, while the Department of Justice is likely to present its final judgments in November itself. Now, if this happens, this could potentially be the biggest antitrust victory for Department of Justice. Google already, as we know, is facing the regulator's ire over several other issues, over several other cases as well. So trouble definitely mounting for Google. The cornerstone of these cases against Google remains that Google has allegedly involved in antitrust practices and has limited competition to act in the space and has maintained its monopoly over these past few decades.
All right, then trouble is mounting for Google. Thanks for that take coming in, Sumita. But with that, we're completely out of time on this edition of Buy Now, Sell Now on ET Now. Markets at noon with Cheryl as well as Someet is going to be taking the action forward. So don't go anywhere.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.